Welcome to our Chinese Finance and Economy Briefing Show. Today, we dive into the whirlwind of the ongoing U.S. China trade war, where President Trump has unveiled a bold tariff plan that has sent shockwaves through the stock market. With a staggering 104% tariff on Chinese imports now in effect, investors are on edge, fearing the potential for a recession as supply chains face disruptions and inflation looms large. In response, China has fired back with a hefty 50% tariff on American goods, bringing their total tariffs to a whopping 84%. This tit-for-tat has escalated tensions, with both nations standing firm in their positions. Amidst these economic skirmishes, China's Premier Li Qiang remains optimistic about the country's recovery, despite the external pressures weighing down its economy. On a brighter note, the tech world is buzzing with excitement as Alibaba's senior vice president predicts explosive growth in artificial intelligence applications in China by 2025. With significant investments and innovative AI products on display, the future looks promising for this sector. Join us as we explore these developments and more in detail. Please continue to watch for the full story. Yahoo US reports that President Trump's recent tariff plan, which imposes a 10% minimum tax on all imports and significantly higher tariffs on goods from countries like China, Japan, and the EU, has sent shockwaves through the stock market. The immediate aftermath saw a plummet in stock prices, as investors feared that these tariffs would disrupt supply chains and lead to inflation and a potential recession. Trump's subsequent threats to further increase tariffs and his announcement of a 90-day pause on some tariffs created volatility, with markets swinging dramatically in response. The article explains the fundamentals of the stock market, including how stock prices are determined by supply and demand and how indices like the S&P 500 and the Dow Jones Industrial Average reflect market performance. The South China Morning Post highlights China's retaliatory measures against Trump's tariffs, announcing a 50% tariff on all American imports, which raises their cumulative tariffs on U.S. goods to 84%. This move is part of a broader strategy by China to defend its economic interests, including filing a complaint with the World Trade Organization and placing U.S. companies on an unreliable entity list. China's Ministry of Commerce emphasized its commitment to fighting the trade war and has taken steps to bolster investor confidence by increasing purchases of its shares. Premier Li Qiang acknowledged the pressure from external factors while asserting that China's economy remains on a recovery path. In another report from the South China Morning Post, Alibaba's senior vice president, Lu Weiguang, predicts explosive growth in AI applications in China this year, driven by advancements in technology and the company's focus on real-world implementation. At the Alibaba Cloud AI Dynamics Fair, various exhibitors showcased innovative AI products, including kitchen devices that adjust cooking processes based on ingredient recognition. With a commitment of $53 billion to enhance cloud computing and AI infrastructure, Alibaba aims to lead in the rapidly evolving tech landscape. The event illustrated the diverse applications of AI across sectors, highlighting the growing momentum in China's AI ecosystem, despite still trailing the US in model capabilities. Foreign policy. The U.S. China trade war has spiraled into a relentless tariff battle, with President Trump imposing hefty tariffs on Chinese goods and showing no intent to ease the pressure. In this high-stakes conflict, Trump believes that his strategy of escalating tariffs will compel China to concede, while Xi Jinping's rigid political structure prevents him from appearing weak in the face of U.S. aggression. As both leaders dig in their heels, the situation has transformed from a negotiation into a dangerous clash of wills, where neither side seems willing to back down. The stakes are high, with the potential for a significant reshaping of the global trade landscape, leaving both nations locked in a precarious stalemate. South China Morning Post. Amid the turmoil of the trade war, gold prices have experienced significant fluctuations, dropping by 5.1% following Trump's tariff announcements. Despite this short-term slump, analysts maintain that gold remains a vital safe haven asset during market volatility. Inflows into gold exchange-traded funds (ETFs) have surged, particularly from mainland China, signaling a strong demand for gold as a protective measure against economic uncertainty. Meanwhile, central banks worldwide, increasingly wary of the stability of the US dollar, are expected to boost their gold reserves, indicating a long-term shift in asset allocation as geopolitical tensions rise. South China Morning Post. In a defiant response to the latest round of US tariffs, China's state media declared the nation's readiness to strike back and fight to the very end, emphasizing its commitment to countering U.S. actions. While China remains open to discussions with the Trump administration, it rejects the U.S.'s unilateral negotiation tactics. The Chinese government has implemented over 20 countermeasures since the onset of tariffs, framing its responses as legitimate and necessary. As the Communist Party reinforces its determination to uphold a multilateral trading system, President Xi Jinping's rhetoric stresses resilience and focus on economic stability, underscoring China's resolve to navigate the escalating trade conflict without yielding to external pressures. The Sydney Morning Herald reports that the United States has implemented crippling tariffs of at least 104% on Chinese goods as part of President Donald Trump's aggressive trade strategy aimed at reshaping global trade dynamics. This move, which affects over 50 trading partners, has intensified the ongoing trade war with China, prompting Beijing to vow that it will fight to the end. As tensions escalate, both Trump and Chinese President Xi Jinping are locked in a battle that is shaking global markets and raising concerns about a potential worldwide recession. Despite facing criticism, Trump remains confident, asserting that many countries are eager to negotiate deals with the U.S. in light of the tariffs. According to Nikkei Asia, the Chinese yuan is nearing a 17-year low against the U.S. dollar, a situation exacerbated by Trump's accusations of currency manipulation. The yuan's decline is seen as a strategic move by China to bolster its export competitiveness amidst increasing tariffs. With the People's Bank of China, PBOC, adjusting its reference rate, analysts suggest that the yuan will continue to face downward pressure as the trade war persists. Trump has acknowledged China's currency manipulation, highlighting the complexities of the economic battle between the two nations. While the PBOC has maintained stronger fixing rates than anticipated, the potential for a further weakening of the yuan looms, as the central bank may consider easing monetary policy to support the economy. The South China Morning Post highlights the impact of U.S. tariffs on Vietnam's aspirations for a thriving digital economy. With a hefty 46% duty imposed on Vietnamese imports, the country's electronics sector faces significant challenges, particularly as it strives to position itself as a key player in the regional digital value chain. However, Vietnamese leaders are proactively engaging in diplomacy with the U.S., proposing to eliminate tariffs on American goods to foster a more favorable trade environment. Optimism remains regarding Vietnam's digital future, as the country has launched initiatives to boost its tech ecosystem and regulatory framework. Despite the competitive pressures from regional heavyweights like China and Singapore, Vietnam's young workforce, lower labor costs, and transparent regulations could enable it to carve out a unique niche in the digital landscape. CBC reports that the United States is set to implement a staggering 104% tariff on imports from China, effective shortly after midnight, which has sent U.S. stocks tumbling and quashed earlier market optimism. This decision follows a tit-for-tat response to China's counter-tariffs and has sparked fears of a looming recession, disrupting a global trading order that has persisted for decades. The Trump administration is prioritizing negotiations with allies like South Korea and Japan while sidelining China, which has vowed to resist what it perceives as economic coercion. With prices expected to soar, many Americans are already feeling the pinch. A Reuters Ipsos poll indicates that 3 out of 4 anticipate rising costs. Consumers like Thomas Jennings are stocking up on essentials, preparing for the financial fallout. Meanwhile, companies are bracing for the impact, with chipmaker Micron announcing a surcharge and clothing retailers delaying orders. Despite a brief rally in global markets, the looming tariffs have left investors anxious and business leaders urging a reconsideration of Trump's aggressive trade policies. Thank you for tuning in. The content above showcases the latest briefing reports and analytical synopses, thoughtfully curated by the 6Do team. These insights stem from a wide array of reputable media outlets, think tanks, government sources, and specialized experts worldwide. We encourage you to explore these sources for a comprehensive perspective. Keep in mind that while the content may not always align with the official standpoint of 6Do Brief, it's not meant to be taken as absolute directives for decision-making. Comprising seasoned media professionals, learned scholars, and accomplished scientists, the 6Do team embodies a trailblazing, fully independent media entity. To customize 6Do Brief to meet your professional needs, you have the option to subscribe to a diverse array of briefings on our website, 6dobrief.com. Regardless of your location, you can conveniently receive 6Do Brief via email.